Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, March 14th. It is 6:50 a.m. as I'm starting the video, and don't forget to run your player at 1.5x. Quick look at futures. Commodities are getting whacked. Oil's down 5%, copper's down 2.25%, gold is down 1%. Equities are up between 5/10 and 8/10. Bitcoin's up 2%. Not a lot going on domestically here on the macro front, but internationally, you may have seen over the weekend, Shenzhen in China, that's a city with over 17 million people on lockdown due to COVID. They're a big manufacturing hub. Fourth largest shipping hub, so that could ensnarl some of the manufacturing supply lines and shipping lines, so that's not going to help matters at all. I guess Apple's got a lot of stuff there. It's a big, I mean, if you're pulling stuff out of China and you're doing assembly work, it's a good chance Shenzhen's going to be involved, so we're going to need to watch that closely. On the blog site this morning, I got a couple things that may be of interest to you. I go through an oscillator update. Nothing there really to report, but it'll give you an idea where the posture is on those. I also go through a number of charts on the big banks, not looking very good. Financials are the second biggest sector weighting in the SPY index. So even if you're not trading them directly, good idea to keep an eye on financials. And it's hard to see, if tech's weak and financials are weak, you got nearly half of the S&P not doing well. So it'll be tough for the S&P to put in a good rally without financials participating. And I've also got a chart on Dutch Brothers, ticker BROS. They have an IPO lockup expiration today. I give you the key levels to watch if you want to potentially get involved in that IPO lockup trade. I don't know any other information beyond that, but it did come to my attention, and I want to pass it along. I'd also like to thank Tammy. She's a person in the group, been following us a while. She sent me a short but heartfelt thank you note for the work, and some personal stuff in there as well. I really appreciate that, Tammy. If any other of you care to reach out to discuss anything with your trading or really anything at all, you know how to get in touch with me. I'm happy to do all I can to help. And so Tammy, thank you. That was an uplifting note. I appreciate getting that. So moving on. We were talking about the VIX on Friday. Friday was a bad day at the office. Had a pretty poor close. We had, remember, the fake pre-market news. Putin said good things. We ran up to the top of the range, actually filled a couple of gaps in the charts, and as soon as the bell rang, they sold it. And of course, that meant the VIX went the other way. You can see that we had opened in the 29s and then closed up near 31. So we've had quite a number of days up over this 30 threshold. So I think, it's going to be an important barometer to watch in real time during the day if you're able to keep that on your dashboard. And just to set the stage for this week, it's a really, really big week. We've got Jay Powell on Wednesday with the big rate announcement. Everybody's penciling in 25 bips. QE ended last week. We talked about how bonds have been wobbling, the HYG, the LQD, the TLT, and we haven't even started tightening yet. So that Jay Powell announcement is going to be real big, and then he's got the presser at 2:30. And then on Friday, we've got a huge March options expiration. I was reading somewhere that it's the biggest monthly option expiration since 2019, with $3 trillion on the line set to roll off. So, number one, a lot of stuff going on. Yeah, I mean, and that's not even discussing Ukraine headlines. You got Ukraine, you got Jay Powell, you got a massive options expiration. There are plenty of catalysts in there to rip this in either direction. And I make a point in the blog site today. There are times when you, as a trader, need to simply realize that either stepping aside or radically reducing the number of stocks that you open positions, and those position sizes are the right move to make. As we go through the charts today, they're all bearish. We know that. But also sentiment is blown out. The fear and greed index, I put that on the blog today, it's at 14. Typically you don't see market crashes at when you've already got everybody fearful. And we know, and we've discussed, that on these market rallies that we've had, people rush in and buy puts, either to make an outright bearish bet or to hedge their position. So from a sentiment standpoint, super bearish is contrarian bullish. And from an option positioning standpoint, very rarely do you see, when everybody and their brother has puts, it's hard to break that. The market in general would like to see all of that expire worthless on Friday by keeping it, just above the range. So, we'll probably get a pause heading into Jerome Powell. Maybe we just start drifting, tomorrow afternoon into Wednesday on the print. Then at 2 o'clock, we'll get a wild reaction, either, a knee jerk either way. And then on Friday, we will see if the market makers can hold it in a range so that the most people lose. Now, that said, if the market does get away from this little range that we've been trading in, it could get really, really wild. For example, if we were to drop down and take out the February lows with conviction, and you're sitting on your screen and you start getting hit with downside alarms like a Gatling gun, that should be a sign that something's happening. And I think that's exactly what would be a big sign. Now, if you get one little alarm, that's not the dam collapsing. If you get hit by 20 of them, and you see Apple and, all the fat man names and the Qs and IWM and SPY all breaking down below those February lows, then it could be a dramatic rug pull. So in general, what I would be saying and coaching is your number one obligation is to preserve capital. Your second goal is to make money. So during this week, don't get chopped to pieces. Wait till you see something that you think is real and then trade small, but be prepared for either a moonshot on Ukraine or a kill shot, possibly from Ukraine, possibly from Jay Powell, possibly from the market makers losing control on that Friday options expiration. It could come from anywhere. Or we just hold the line this week, and next week is the week to see super high volatility after all of those options roll off. So let's get into the charts real quick. Talked about the poor day on Friday. Here on SPY, we opened high, finished on the dead lows. I think 420 is your pivot today. You can see that we still have a part of this gap to fill. I've added in a couple of other trend lines potentially to use as visual references, but whenever you're looking at a chart, easy way to size it up. Number one, am I above or below the 200? We're well below. Am I above or below a trend line? Below a downtrend line? How are the moving averages stacked? Well, we've got the 50 above the 200, but then we've got the 20 and the 8-day below the 200. So that's a bearish setup. Where are your indicators? RSI, bearish regime. PPO, bearish regime. Not even turning up at this point. So there's not a lot to indicate in the charts that it is, anything bullish here, because from what I see, nothing would really lead you to believe we're at or near a turn. Moving on to the 2-hour chart, you can see we partially got into that gap on the Friday close. So in order to fill that, we got to move down towards 415. That's a nice move in itself. That's $5 from where we sit right now. So that's a good trade. And notice on Friday, that opening, we had a gap up here at the time. I've since removed it, but it filled that gap, came right up to the downtrend line, and then they sold that right away. Here on the 30-minute chart, you've basically got a magnifying glass. Look at where that bar stopped, right here at that 428 level. Now I've drawn in a symmetrical triangle around the price action, and you can see this thing starting to coil. So I would be keying off of 420 as your pivot, but then watch these trend lines for either breakouts above or breakouts below. And if you got a move below, say 415, then that opens up this prior low down here in February, down at, I believe that was 411. So stay on your toes. You've got some good lines to use as references here. QQQ daily, same kind of methodology. Got a bearish stack on all our EMAs. 50 below the 200, 20 below the 50, 8 below the 20. That's bearish. Price pinned below a steep downtrend line for quite a number of weeks. We had a big red candle on Friday. We closed this gap, and we're actually very, very near those February lows. We've already tagged that level once back here, but you've got this level right here at 319 or so. So if things get crazy and we get a breakdown below the February low, could move very, very quickly down here to this 310, 305 area, where we've got a $5 gap that would take us down to 300. So have that level alarmed at the February low. You can see it in more detail here on the 2-hour. Working down in this big triangle. We had the strong open on Friday, which they sold the rest of the day. So not a real good close on Friday. We'll see what they can do with it today. And here it is on the 30-minute chart. You just get that resolution. You can see the February low here. We had an intermediate low here at 319. That would be a place to potentially look for a bounce. If not, we're going to go down and retag that February low. And then that's got to hold, or else 310 would most likely be in the cards. And don't forget about that gap down there at 305. IWM, I mean, we still have the bearish stack and below trend line and all that. So that's, that remains consistent with what we've been saying over the last quite a number of weeks. But it's been outperforming. This chart looks a lot different than this chart, where you've got a steady downtrend line. Over here, yes, we have a downtrend, but this has been consolidating for, better part of 2 months in this trading range. So this particular index has really stopped going down, and you can't say that for SPY or the Qs that have been working their way down the whole time. We had an initial plunge here, but then it held. We've already back tested the lows, and now we bounced and working around in here. So, I mean, I'm not ready to get bullish on IWM by any means, but what I am saying is this could be forming a base as it chops around in this range. I mean, I hate to say it both ways, but I have both scenarios in my mind that this is just a big bearish flat flag, and then we break down 187 and go to 170 real fast. That's off the weekly chart. Or this is a base, and then we break out above the downtrend line, recapture the 50, break out above, and then move back into this 210 range, which would then target the far side of the box up at 232. So we're going to have to see how it plays out. But it's interesting to notice that IWM is really not going down like the other ones. Here's some resolution here for you with the downtrend line. We've got a bit of this gap to fill this morning. I think you can use this 195 as your pivot. See if this fills, and then you get a bounce, or key off of this 198 level. If we go up on the open and you recapture 198, you may get a run up into this downtrend line at 200. And here's another triangle I've drawn for you off of the February lows, picking up these intermediate lows and ending with Friday's lows. And you can see we've got a series of lower highs along the top. So again, we've got the coil energy building within the triangle. You get a breakout on the top side or the bottom side. Could be some decent energy there for more of a sustained move. I don't think you're going to get, like it dribbling higher or dribbling lower. I think you're going to see something with a little power behind it. All right, at this point, I'd like to do as I normally do, welcome any new visitors to the channel. I really appreciate you being here, spending some time with me and the rest of the gang. I do my best each morning to set traders up with objective levels to get them off to a good start during the day. I cover the indexes, fat man names, and usually a name or two as a trade idea. So if that appeals to you, please hit the subscribe button and the alarm bell. Jump over in the show notes, join the team, find the link that takes you to the blog site where you can drop your name in and email address. Then morning, noon, or night, you'll get my comments on the market, anything that I see, trade ideas, etc. And you'll also get an invite to the trading room where the rest of the gang, guys and girls trying to get better, working hard in the trading room. Good group of people, warm and welcoming, and oftentimes quite knowledgeable. I learn a lot just by hanging out in there. So, and pass the link along to anybody else that you may feel could benefit from the work. That would be great. Facebook. They sold all day Friday, except they held the line at these prior lows. You get a break below 188. You're going to see lower figures. We've got a line off the daily chart down here at 180. Really a band between 182 and 180. Nothing positive yet out of Facebook. Your first sign of a bullish move is going to be a breakout above this trend line here, and then we'll see where it can go to the upside, but nothing even remotely close to that yet. So I think you got to lean on the bearish side on Facebook for now. Apple, we had said all along in here that we thought price was going to find the 200 again, and it found it on Friday. This is the daily chart. We broke this intermediate trend line. We had a big support area here between 157 and 161. Well, we broke through that. Now that support band becomes resistance on the way back up. So we've got, if you want to think of it, 3 layers of support. We've got the 200, we've got the uptrend line, but then just below, we've got the February low and lateral support right at this 152 area. So, I mean, if it's going to bounce, it should bounce right in this area. And if I were trading it, let's look at the 60-minute chart before I talk out of turn. I haven't moved these pivots, obviously. It's down here at 156. But what I'm saying is, remember, you got a trend line coming up through here on the daily chart. You've got the 200 coming in here. And then you've got the February low right here. I mean, I would not mess with this on the downside this morning unless you get a break of the February low down here at 153, 152 and 3/4. You get a breakdown here, then you probably are merited in taking a short with your stop against the 200, because once it loses the 200, then it's on the wrong side of the chart, right? So I think you want to use the 200 as your pivot not get too excited if it undercuts it just a little bit. But if it loses the February low, then I think it'll be game on to the downside. But as long as it's above, I think that's a setup for a whipsaw. You know, you drop below the 200 here in the trend line, you get short, and then they rip it the other way. That looks a little bit too simple. I'd rather wait till this this lateral support shelf at 150, 152 breaks, and then you've got some more downside coming. Tesla daily below the 200, below downtrend line, sitting on 800. I think that's your pivot for today. You can see quite a bit of ways to fall down to this lower trend line that I dropped in right down here around 730, let's call it. But then you got the February low at 700. So you got two good levels there to look for on the downside if there's a break of 800. On the long side, unless you're a sharpshooter, I don't see a lot to, try and do here until you get a breakout above 825. You get a breakout above the downtrend line, then you got a shot at the 200, and then you got the 50. So if everything starts getting bullish, you can look for that. But I think the easier trade is to the downside right now. If you get a break below 800, you could certainly take that short with a stop just above, and then be looking for 730. Pretty good risk reward there. Microsoft 60-minute price came down to this gap. Remember, we had the gap up, it came back, actually touched it. Fake move Friday morning, they sold that right back down to the top of the gap. So I would use the top of the gap at 280 as your pivot, with the bottom being at 276, and then you got two prior lows right here at 272. If you got a gap fill this morning and then the bottom of the gap did not hold, you're going to go from 276 to 272. So those are the levels that I would use on any kind of short trade. On any kind of bounce, I think your first resistance level is going to be 283, and then 287.50 up here. So I think those pivot levels are pretty clear. Amazon, we had the gap up on the split news. We had the little Putin fake out Friday morning, which they sold. I would use 2,900 as your pivot. You've got a good size gap below yet to fill. You could get a bounce at 2,900 right here, back up to 2,950, potentially 2,975. I think it would take a lot to get a breakout here to the upside, unless the whole market turned positive and you started getting breakouts on Apple and Facebook and Google and all this stuff. I don't think you're going to have one-off breakouts on the fat man names unless they all go together, and unless there's some broad market-wide catalyst. That might be the Fed, that might be positive Ukraine news, or something wild on Friday. So those are the levels. If you're in there and you're trading, or you just want to be ready, set your downside alarms and set your upside alarms. When I'm trading a stock, even though I quote think it's probably going to go down, I still alarm the top side, because if I forget about it, or for any reason, and the thing breaks out to the top side, one, I want to be aware of it, but two, say I'm trading Apple, one of the other fat man names, and I've got Google and Facebook and Microsoft and Tesla and all these other ones alarmed on the upside, and I'm trading Apple and I start seeing a move, and then the top side alarms start going off across the board on the other fat man names, that's going to give me a lot of confidence that this group is on the move higher. And even though Apple's the one in front of me, hearing those other alarms going off will certainly embolden my confidence. And if I get the breakout in Apple, I certainly would want to jump on it. Moving on to Google, same basic setup as the rest of them. This was the high tick on Friday morning, which they sold the rest of the day. We've got a good size gap below. I would be using, what is that? 25.95 as your pivot. And you've got a pretty good size gap to the downside yet to fill. You see the February low back here, and then you got the prior low here. So I would use that 25.95 as your pivot. And then notice the high volume over price bar here, right at 26.10. On any bounce, getting above this bar will be important. Then it will have room to run up to 26.60 if it can, in fact, do that. Netflix, I'm out to the weekly chart on this one just to show you where we're at, big picture. We lost this high volume bar on Friday. You can see here we closed below. So until price can recapture 350, I think you still got to lean short on this. And it's not a pretty picture. You take the first leg down, this distance, we did get a kickback rally, but then you take that measured move, here's your A, B, C, and it's way down here. And unless the market and Netflix in particular turns around, the measured move target puts it down here at 260. So that would be quite a bit of ways lower from here. Semiconductors, again, very weak on Friday. We opened up right on this trend line and sold the rest of the day. I think Friday was all about, did you recognize that opening move as fake or not? Because in every instance, at least on the stuff that we watch every day, the indexes and the fat man names, they all sold right out of the gate. And so if you recognize that, it was an easy day from the standpoint, you can see here just on this chart, no whipsaws at all. Whether you got, short right on the open or shorted any of these bars, there were no kickback rallies to shake you out of your position, get you scared, or give you any other information other than it was right to be short on Friday. So now today, SMH got to hold 246, or we go down and find this low right here at 240. And I went out to the daily chart and got us another level here at 235. So 246, 240, and 235 are your levels to the downside. If it can bounce here, we have 252 at the top of the old gap, and then we've got a downtrend line coming in. If it can jump the downtrend line, you got 254. You got a little gap yet to fill up here, right on up to 257.50, 258 right here. And if it could get above that, then it would have some room to run to the upside. DocuSign. Friday, we talked about the rug pull. Here is the bracket trade setup if you didn't get that. We had the gap down and then some trading during the day. The way you set up the bracket trade is you mark your gap, then you mark the boundary of the trading that happened that day. The low was 71, so now you can play it any number of ways. In general, what you want to do is you want to follow price out of the bracket. So the bracket is 71 and 77.81. That's where you set your alarms. If you get a break into the gap, you take it long and look for that big gap fill. If you break down below 71, you get short and you follow price to the downside. That's the favored move. Why? Price usually goes in the direction of the gap. So in this case, the gap was down. It usually, you'll get follow through. Not always. That's why you alarm it. And you certainly want to be involved if everything gets bullish and this rips to the high side. But if it were to go to the low side and break down, I certainly wouldn't be bashful about selling it or getting short against 71. A nice thing about these bracket trades as well is it gives you a clean line to shoot against on your position. So if you got short, you could set your stop just above. If you got long up here, you can set your stop just below, and then you got a real objective line to shoot against. If you get that alarm after you take your position, you just take it off, take your paper cut, and then set it back up again, right? Stay on it, because there is going to be a nice move coming out of this, I would think. It may trade in this range for several days. That's fine as it consolidates, but it is going to move out at some point. And if it moves out to the high side, I mean, you've got $15 there, essentially, on the gap fill. And if it moves to the low side and the market starts falling apart, you'll have a good short setup that you can let run to the downside. So that's all I've got for you today. Let's do a quick recap heading into the week. Really, really big week. VIX persistently over 30. I think you got to be really cautious in that environment. No need to be a hero. What you should be trying to do is preserve your capital. Make sure you got clean shots wherever you may take them. Realize that Jerome Powell can and has said anything at these pressers, whether it's a gaffe, whether he decides to go 50 bips, not 25. May have, may have comments about the balance sheet runoff that nobody's expecting. So that can go either way. And we've got the massive OPEX on Friday, $3 trillion rolling off with a lot on the line, with a lot of people hedged up to the downside, with sentiment really, really bearish. Can the bears really break this thing with that put wall down below, and with everybody already bearish? Can they break that, or does a Ukraine headline be the thing that takes us down or gives us a moonshot? So be careful out there. Not an easy environment to trade by any means, so be careful. Hope you got a lot out of the video. This has been Chris Buss with Traders Profit Compass. Talk to you next time.